Hey everybody, Tom Gentile. Welcome to my trading room, and today we're going to talk about me getting out of Florida and heading to New York. So I want to talk about a couple of different things we're looking at, plus how we can look at this as a trading opportunity in a session that I call Trading the Van Life. Let's get started. Hey everyone, Tom Gentile. Welcome to Tom's Trading Room, and in this video we're going to talk about trading the van life. We're going to look at a couple of different van options, but I want to talk about trading the stocks, and more importantly, the options on the publicly traded travel and leisure industry. If you like this video, show me some love, give me a thumbs up below, and hit that thing and turn it blue. Subscribe to these videos and hit that bell, and you'll be notified every time we upload a video. So, this whole idea of van life, all right, started with my wife and I looking for alternative travel as we're going from Florida to New York. And in this pandemic, it changes the dynamics a bit. Normally, we wouldn't care. We take a plane, we take a train, maybe we drive, but now we have to weigh those options in a pandemic. So, when I look at the options, first of all, taking a train is probably the worst if you can even do it, all right, because Amtrak may not be in service at the time we want to leave. Number two, flying. Although you're a little bit more distance between you and the passenger beside you, it's not a perfect world, all right, because you're going to be interacting with everybody from the time you step off the curb at the airport until you reach your destination. Driving makes a lot of sense, but even there, for stopping at rest stops, stopping at restaurants, stopping for gas, you're still interacting with people. The best thing that we could come up with is to drive in a self-contained recreational vehicle, which has onboard kitchen, onboard bathroom, onboard showers if you need it, and onboard sleeping arrangements. Two things came up. Do you want to just buy one off the lot, or do you want to build one? All right, there's some pluses and minuses to each of these. If we were building out, all right, you're starting with basically a shell. Now, you're buying a chassis, it's unfinished, you build it out yourself, you can either do that or you can subcontract it out. It's going to be cheaper than buying one completely finished, but it's going to take months, and months I don't have. So we looked at buying, and most of these are built on the Mercedes platform or even the Ram chassis, all right? And if you can find partners such as Airstream and Winnebago that actually put these things together and deliver a first-class product. They're not cheap, all right? And they're also hard to find in a pandemic because guess what? Everybody wants to get out these days and do something, and these are red hot right now. Now, there are other third-party conversions like Thor, MDC, American Coach, etc. The prices on these are unbelievable. You're talking about things that are north of $100,000 to $300,000 for a van. So get used to it. But get used to something else. I looked at this and it inspired something for me. Not living the van life, trading the van life. Because when I looked into these and I went to the dealers, and I went to a dealer called Lazy Days in Florida. It turns out they're the largest dealer in Florida, and they have places all over the country. Lazy Days, believe it or not, is a publicly traded stock that went for $1.50 just a couple of months ago and traded north of $10 today. And I started thinking about the fact that what do the bigger companies look like? All right, what do the Airstreams look like, the Winnebagos look like? What's in the news out there? What's driving them? And so that's what I ended up doing. Take a look at some of the news that I found. Winnebago beats results by a wide margin as motorhome sales post-surprise increase. All right, Airstream Winnebago sales hot as the road trips gain popularity. New outdoor recreation boom because of coronavirus helping. And Airstream Winnebago sales are hot as vacationers pick road trips over air travel. That's what's happening. People are thinking safety first, and they're also thinking, where can I go where I have open spaces? And that's what's leading a lot of folks to recreational vehicles. What it led me to is looking at the stock chart of Winnebago itself. So behind me is the chart of Winnebago. And the chart runs from about February 20th all the way out to today. Back in February 20th, we're talking about a $62.50 stock that dropped down as low as $17. That was back on the middle of March before rallying and taking us up to a high of 72. We've had a slight pullback. From here, we could pull back a little bit more, or we could run back up into these highs. What I did was I snapped Fibonacci ratios from the lows of March 23rd to the highs of just last month. And we could see that a 38% retracement, that means from bottom to top, back 38% would pull us back to $51.67. I also have a 50% retracement and a 62% retracement, and those show $45.74 and $39.80 respectively. Now, I believe that if this is a true trend that's going to go higher, we're likely to pull back to the 38% level and bounce from there. It's happened before. It actually happened with Facebook on a video that I showed you not too long ago. Now, Facebook and Winnebago have absolutely nothing in common, but if you look at the charts, these charts, they're strong charts. They have soft pullbacks and then move higher. If you believe that Winnebago is going to move higher, then this might be for you. The other thing I did was I went inside the chart, and I blew this up so you can see what's been happening just since April 30th. Since April 30th, we've been having this higher low and higher high scenario happening with Winnebago before getting the brief pullback. And you can see here that this is culminating around three channels. We got a long-term channel that's going up. We have a short and intermediate term channel that's going sideways. So we're looking at shorter term support somewhere down around the $57 area, where shorter term resistance, well, it's back at that high of 72. If we do bust above 72, I've got a next area of resistance which takes us all the way up to 100. That would be a huge melt up for Winnebago, not something that I would be looking for, but nonetheless, that's what the long-term trend shows us. All right, if we do see a bust down to 57, then we could be coming down to the next level of support, which would be $45 a share. I've got two trade case studies I want to show you based on each of these scenarios. So, first, if you believe that Winnebago is going to continue to bust out, continue to have above average sales, and continue to trade higher, then this is what you want to look at, call options. The October 16th, 2020 calls, they're not cheap. All right, if you take a look at the stock price, which is trading in the low 60s right now, the 60 calls are trading for $8.45. That's expensive. Even the ones that are slightly out of the money, $6.25. That's the 65 calls. 67 calls, $4.50. If you believe that the stock doesn't have to go to 100, but if it goes to 70, if you think that's your target, then perhaps instead of buying the 65 or 70 calls, you put these together and create what we call a bull call spread. A bull call spread is when we buy the lower strike call, sell the higher strike call. We bring those together for a shorter, smaller price, all right? Lower cost, lower risk, lower break even, and you have a really nice upside too. Take a look at this graph I put together, buying the 65, selling the 70 calls for October for Winnebago. As you can see, as of this video, we're talking about $175 for this spread. Not $625, not $450, but putting those two options together, buying the lower, selling the higher, we're looking at a cost per spread of $175. Now, if Winnebago drops against us, that we can lose no more than this. But if it does go up, and it goes up above, at or above 70 by expiration in October, we're talking about rewards that could be right around the $325 area at or above 70. So risking 175 to make a maximum of 325, that's a great looking reward to risk ratio, RRR. All right. Now, if you believe that this is all overdone, that you want to play contrarian to this, that Winnebago and the entire leisure industry has just gone crazy and needs some pullback, then perhaps you want to look at puts. The puts are also expensive because volatility in this particular category is very high right now. So if you look here, you'll see 60 puts trading for $7.30. If you bought those, the stock would have to be down into the $62.70 range by October for you to break even. That's a long trip down. I'm sorry, $52 $1.70. That's a long way down from where the stock price is right now, right? But if you believe that, let's say, 50 is a good area of support, and I showed you a support point at 45 just a few minutes ago. But if you believe 50 is a great area of support, then perhaps, once again, buying the 55 puts, selling the 50 puts, you'd pay $5 for the 55s. You could bring in $325, $330 for those 50 puts, put that together, and you're talking about a trade that is, again, going to cost you roughly $170. So how do we come to $170 cost and risk? Once again, we're paying for the 50 puts, all right? I'm sorry, we're paying for the 55 puts. We are selling the 50 puts against that, so $5 minus $330, and you're talking about a cost of $1.70. Multiply that times 100, because that's what a contract is good for, 100 shares of stock. You're talking about $170 cost and risk. Now, remember, this is bearish. If Winnebago goes higher, you could lose up to that entire amount. But if it does go lower and it gets to the $50 mark or below, as we come into October expiration, you could max out this trade with a maximum gain. Again, we're looking at about $330, all right? $170 risk, $330 potential reward. Again, we're talking about max risk to max reward exceeding 1-to-1, all right? Almost at 2-to-1 for this particular trade. So in summary, you know, whether you live or trade the van life, it isn't something to be taken lightly, especially living the van life. That probably is more risky than trading the van life. And if you're going to trade the van life, I've shown you a couple of great ideas here. You know, the thing you have to ask is, will the manufacturers continue to shine, or are they done? As this blown up and now sales are going to drop, and if sales drop, so do the prices of these manufacturers. All right. So last point, whether you're bullish or bearish, you have to have the belief that Winnebago is going to go in your direction, right, for these option trades, or any strategy for that matter, to work out and make sense. All right. Hey guys, like I said before, if you like this video, show me some love, hit that like button below, subscribe to these videos and hit the bell, and we'll notify you every time a new video is uploaded. Thanks again. Have a great day. Bye now.